Welcome to our next delivery on business accounting, and today we will look at the general ledger. We will understand what is the general ledger, and then we will do the posting from the journal to the general ledger. As always, make sure that you have a notebook and a pen with you to make some notes and to jot down your questions. At the end of the session, we can look at the questions and then try to answer these questions. I took some definitions of the website and I will quickly read through them just to get an understanding of what the general ledger is all about. So the first definition that I got from TechTarget is it's a set of numbered accounts. So there you can see it's a set. A set tells me it's complete, it's more than one. Numbered accounts, numbered tells you there are numbers and it will be in sequence. Then another definition that I got, it's a record keeping system of financial data with debit and credit accounts. Alright, so when we talk about accounts, and you will see that most of the definitions are referring to accounts. An account is always in the general ledger. You can't have an account in the journal, it must be in the general ledger. Then another definition is the recording of all the transactions that will affect the accounting elements. Now you will remember the accounting elements. We had 5. We had income, expenses, assets, liabilities, and then of course the difference between assets and liabilities will be your owner's equity. So it's the recording of all the transactions that will affect the accounting elements. And then another one that I got is it's a master accounting document providing a complete record. So there you have complete again, and then we also look at the first definition, a set. So it tells me it's more than one account, it's actually all the accounts. How does a general ledger work? Now a general ledger is a double entry system. Double means 2. And it's entries that you have on the debit and also on the credit. And at the end, your debits must be equal to your credits. This is how the general ledger works. Now, where do you get the information from the general ledger? And we will look at that in the following page. Where will you get the information from to do the general ledger? You will remember our first step in the accounting cycle was the transaction. And from the transaction, we received a source document. And what did we do with the source document? We entered that source document into our journals. Now, we refer to these journals as the books of first entry. You could also refer to those as the books of primary entry. And you will remember that we had journals for credit entries, we had journals for cash entries, then we also had the return journals, and then the last one for those odd transaction that could not fit into the other journals, and that was called the general journal. The general ledger account is also referred to as a T account because you had the line on top, or you have the line on top and then also the line in the middle of the page. And then on the left-hand side of this middle line, you have the debit side. And on the credit side, you will, rather on the right-hand side, you will have the credit side. So your debit entries will always be on the left, while your credit entries will always be on the right. Then, in the middle of this line, you will write the name of the account. This is where your account name will be. And remember, one of the definitions spoke about a number. So this account name will have a number, and we will call that a GL with a certain number. And that GL stands for General Ledger. When we look at the one side of a general ledger account, in my first column I will have a date. This is the date that the transaction took place. I will have another column for details, and this is where I will write the name of the other account involved. You will remember that we said for each transaction you will have 2 entries. That was the double entry principle. So the details will refer to my other account. Then if we look at the third column, this is where we will have the folio. Folio, this is the number of this account. And then my last column will be my amount, my transaction amount. Now, this can be the debit side of my account, which is now on the left. But when I look at the credit side on my right, it will be exactly the same. So in other words, my general ledger account will consist then of 4 columns on my left and 4 columns on my right. So in total, I will have 8 columns. This is an illustration of your general ledger, and you will see you have on the debit side your 4 columns, and you have on the credit side your 4 columns, and it's similar. All right, now you will remember that we spoke about bills, and that was on one of the videos that we watched, where they showed us the basic debits and credits using the word bills. Now let's quickly use that word bills and then apply this bills in our general ledger format. Now the P, you will remember, was for purchases, and I will just write it there, purchases. The E was for expenses. And the A was for assets. So now you can see on the debit side of my general ledger account, I will have purchases, expenses, and assets. Now we look at the R, which is revenue. Now revenue can be sales, it can be rent received, it can be interest received. So there's more revenue than only sales. Then I look at liabilities. And then I have sales. Alright, so now you will see P, E, and A is on the debit side. There's my P, E, and A. And on the credit side I have R, L, and S, bills. And this only indicates to you on what side these amounts will increase. So in other words, my purchases will increase on the debit side. My expenses will increase on the debit. My assets increase on the debit. When we look at the asset side, or on the credit side rather, we will see that revenue then increases on, let me just take the blue, revenue will increases on the credit side. Remember, revenue is not only sales, liabilities on the credit and sales on the credit. But what will happen now if we want to decrease an asset? And you will remember that bank is one of our assets. Now, if we paid from the bank, we will decrease the bank. So if we want to decrease an asset, we will just credit that account. If we want to decrease one of the credit accounts, we will just debit that account. Let us now look at a very simple example or a very simple entry in the general ledger. Now, I will read it aloud. On the 3rd of March, the business paid salary with an EFT. Now, Immediately when you see the word EFT, you know that is the bank. So I will indicate this is my bank account. And I also have my other account, which is salaries. And let me indicate it there. This is salaries. All right. There's my two accounts. Do I have an amount? I have my amount, which is 1,000, and I have my date. All right, so let's start to do this one. My salaries, they are an expense, and remember, expenses increase on the debit side. So my salaries will increase on the debit side. So I will have 1,000. My contra account, or the other account involved, is the bank. So I will just write there bank. And my date is on the 3rd. All right. My next entry, remember, for every transaction I need 2 entries. So the next one is in the bank. But now an asset is also, or the bank is also a form of an asset, but now we are paying from the bank, so we are decreasing the bank. And remember, when we decrease the bank, it will be on the credit side. So I have my date, I have my amount, and what is my details? My details refer to the other account involved, which is salaries. All right, now you can see that we are perfectly in balance because we have 1,000 on the debit side, we have 1,000 on the credit side. Let's quickly look at our details. In the bank, my details for this transaction was salaries, and it referred to my salaries account. In the salaries account, my contra account, or the other account, was bank, so it referred to my bank account. So this was to pay an expense from a bank account. We will now look at an income. So when we receive income, which accounts we can debit and which ones we will credit. In this transaction, we received cash from our customers, and it was for cash sales, and the amount was 2,000. Now let's quickly identify our two accounts. We received cash, so that will be my first account, and it was for sales. Now let's quickly look at cash. Is cash an asset, liability, expense, or an income? A cash is an asset because it's something that you own. So my first account will be cash, and my second account will then be sales. All right, let's look at my cash account. My cash account is a form of an asset. It normally increases on the debit side. On the debit side, remember, that's the left-hand side. When we receive cash, our cash will increase, so it will be on the debit side. So there's my 2,000 cash. My other account involved is sales, and my date is the 4th of March. Now let's look at sales. Sales is a form of an income. Remember, PILS, the last letter, refers to sales. So sales will be my credit. There's my credit. My contra account, the other account, will be cash. And my date is the 4th of March. Let's quickly look at the transaction again. We had cash that we received from sales. Sales is the income increase on the credit side. Cash is the asset increase on the debit side. Within my cash entry in the cash account, my details was sales, and that referred to my sales account. In my sales account, My details for that entry refer to cash, and that refers then to my cash account. And there you are. So we did now an expense and we also did an income. You will notice in this transaction or this exercise that we now bought goods on credit. Now just to go back to our purchases, purchases will be seen as an expense. Purchases relates to those items that you buy in order to resell again. So in other words, if you purchase an office desk, you don't want to resell the office desk. That's not part of your business operations, so that will not be called purchases. You will also notice that we did not buy with cash, we bought on credit. So let's quickly identify our two accounts. I would say Shilongu, we bought from him on credit, so he will be called a supplier, accounts payable, or a creditor. My other side of the transaction or my other account will be purchases. All right, now let's go back to our word polls and see where purchases will fit in. Polls, P equals purchases, so purchases will be my debit. So let me open a purchases account. There's my purchases. My other account I said is Shilongu. Now remember, Shilongu can be called a creditor, a supplier, or accounts payable. All right, where's my debit? Where's my credit? Purchases will be my debit. My amount is 2,000. What is the name of the other account involved? It is Shilongu. And my date is on the 5th of the 3rd month. All right, where's my other transaction, or rather the second entry? Remember, we work with a double entry principle. It is Shilongu. Now we bought from Shilongu on credit, so he will be a liability. Liabilities increase on the credit side. My other account is purchases, and I will only write over there, and it's for 2,000. Let's quickly see if we are still in balance. We have a 2,000 on the left, we have a 2,000 on the right. Let's look at the details or the account names. We had in the purchases account, we referred to Shilongu. There's Shilongu. In Shilongu's account, I referred to purchases, and there's my purchases account. So this transaction, bank was not involved because we did not touch the money in the bank. We bought on credit. In this transaction, our business paid Shilongu's account. Now you will remember that we bought on credit from Shilongu. So Shilongu is, in other words, our creditor or our supplier. Let's quickly identify our two accounts. We will have Shilongu, and we made a payment. Now we can assume that we made a payment from the bank. So my two accounts will be bank and Shilongu. So let's start with the bank, and there I have Shilongu. All right. What happened to my bank? The bank is an asset. Normally assets will increase on the debit side, but since I made a payment, it will decrease on the credit side. So on my credit side, I will have a 1,000. My contra account is Shilongu because I paid Shilongu. My date will be on the 10th. All right, on the debit side of Shilongu, now remember, Shilongu is a creditor and he increases on the credit side. But now, after this transaction, I will owe Shilongu less. So therefore, I will debit his account. There's my 1,000. where did I get the money from, or where's my other entry from the double entry principle? It's in the bank. All right, let's look at our details. We referred to Shilongu, and in this details, in Shilongo's account, my details referred to the bank. Now, in this lesson, we looked at what is the general ledger, what is the format of a general ledger, and then also we did a few exercises. Our next session, we will use as a tutorial session, and we will do more exercises then on the general ledger account. We will also in the next session start to post our totals from the journals to the general ledger. So this session was basically only to show you once again the debits and the credits in the general ledger. But the next session, a few more examples, and then also the posting from the journal to the ledger.